proposed mortgage reform that could inject nearly $2 trillion into the U.S. economy. And that reform is Freddie Mac filing with the Federal Housing Finance Agency to enter the secondary mortgage market. Joining us now is Meredith Whitney, founder and CEO of Meredith Whitney Advisory Group. Again, Meredith, nobody else is talking about this and could be a really big deal. Just explain what this is all about.
Okay, I think this is potentially a massive game changer. So on the heels of what Leslie said, the banks have really pulled out of the consumer lending market, but for credit cards. And so in terms of mortgages, 70% of mortgages originated outside the banking sphere. And in terms of home equity, they've gotten out of it. So it's been a runoff product. What this does is, so the private markets, hedge funds have bought second mortgages, have bought home equity mortgages, they bought, jumbo mortgages. It stayed a relatively small, expensive product. So quietly filed on April 16th was this proposal you mentioned that would give Freddie the ability to enter into the second mortgage market. And they haven't been able to. This means that a liquidity will come into it. So how I get to the $1 trillion with Freddie is Freddie will only underwrite second mortgages for the mortgages they already have first mortgages with. Their LTV, their average LTV, but this is unpaid principal balance, is 52%. That means they could extend $1 trillion of equity quickly, cheaply, and in a fast fashion into consumer wallets. So consumers have had golden handcuffed. They're sitting on a lot of equity, $32 trillion in equity, and low rates. So they keep their low rate first mortgage, and they're able to get a lower cost personal debt.
It's a consumer loan, right?
It's a consumer loan, yeah. But debt balances have been growing, but on an expensive way because the borrowers have been the private markets. So they'll pay down their expensive debt and access this. So I think there's clearly demand for this product, and it will pump so much liquidity into the market that I think it's highly stimulative, potentially inflationary, and it will come about within the next month. So the comment period ends on May 22nd, and they have no more than 30 days to approve it or dismiss it. I think it gets approved, and I think it will be a massive, massive boom for mortgage originators, homeowners, capital markets. If you look at Rocket Mortgage, it's up over 20% since this was filed. Names like Mr. Cooper, PennyMac, certainly all the Wall Street firms will benefit, and it will reignite the consumer that clearly appears to be rolling over. So this will pump so much more money into the economy. I think it's a bigger deal than a 25 basis point rate cut.
You wrote about this last week. It caused a bit of a splash. Isn't there going to be pushback from people who feel already that Freddie's too big? Is there political liability on it?
I think to the extent that people have PTSD from what happened in 07, 08 in terms of the government being on the hook for Freddie and Fannie and effectively bailing them out. So the governors around this are very, very tight. So no more than an 80% LTV. In terms of the current LTV on Freddie's portfolio is 52%. Right. So they would only allow you to go up to 80%. Now, back before the crisis, you had 25% of loans that were underwater, meaning the mortgage was worth more than the value of homes. And there were loan products, you remember, 125 LTV loan products. It's a completely different environment now. There's 32 trillion of equity, 23 trillion has been created since 2020, and only 14% growth in corresponding mortgage volume. So the home equity second mortgage product is tiny. It will go from under 350 billion potentially to 3 trillion. So Freddie applies first, again, very quietly. I think that there'll be a big announcement when they approve it, but very under the radar screen, filed on the Federal Register. I think Fannie Mae comes behind it, and Ginnie Mae comes behind it, because why wouldn't they? And clearly there's a demand for it.
So the knock on it, I mean, and the Wall Street Journal had an editorial where they called it the return of the Godzillas, hide your children, all this stuff, is that A, it's political in an election year to juice the economy.
It's highly political.
But also that the taxpayer would be on the hook here.
So the taxpayer is effectively always on the hook for a bank failure, right? The taxpayer effectively was on the hook for any financial failure and was on the hook.
For mortgage debt, if it goes down.
For mortgage debt. We're in such a different environment now. So the average LTV is 26% on homes. And so you've got, and you're talking about potentially, this Freddie's program, $1 trillion compared to $32 trillion in equity. It's it's massive, even by Wall Street's standards, but it's so tiny in terms of in proportion to the overall equity in homes.
Wow. So you think this is bigger than a rate cut? And it's going to happen?
I think it's bigger than a rate cut, and I think it happens.
And it benefits mortgage finance companies, banks, and consumers?
It benefits mortgage finance companies, mortgage servicers. It disadvantages any of the expensive subprime lenders, and it benefits the U.S. consumers. So any of the consumer stocks that have been faltering, right? 65% of consumers own homes, 65 households own homes. So I think you're going to get a revival in consumer spending from this as well.
But the ideal beneficiary from a consumer standpoint would be a consumer who has a ton of equity, but income strata, does that matter? What would be the sweet spot?
I think what they're asset rich and cash poor. Now, importantly, Bank of America reiterated this. We wrote about this a while ago, but property taxes on average across the U.S. are up 26%. Homeowners insurance, which is one of the most persistent costs in terms of the services part of inflation, CPI, is high. I mean, the avocado toasters don't own homes, and they're spending like crazy. They're spending faster than boomers at a pace of 5 to 1 because they're not burdened by replacing a roof and property taxes and all these things. So if you look at it through this lens, all these things make sense. At least to me, they do.
Well, I mean, we always count on you to dig up something really interesting that could be a big deal. Meredith, thank you.
Thank you.
Meredith Whitney.
Still to come.